Hello, everyone out there. This is Andrew Berman from National Mortgage Professional Magazine and the Mortgage News Network. Thank you so much for joining us. Today, we have Faith Schwartz, who's the president of Housing Finance Strategies. And really, one of the reasons why I wanted to have Faith on. Faith, going back in 2007, right, is when you started Hope Now Alliance. So Hope Now Alliance was this just an unbelievable alliance between, servicers who we all know in 2007, 2008, 2009, they just got crushed. Defaults went from, normally, less than 1% to, double digits, as many servicers found. And all of a sudden there was this big bottleneck of borrowers that were unable to get a hold of their servicers, and when they got a hold of their servicer, they couldn't get that person back on the line. So basically what it ended up happening was just created this just frustrating situation. And what Faith did, which I thought was just amazing, and not just Faith, but a large team of people put together these events, these really cool events that cool is, if you can call it cool, but where servicers would set up desks, and tell me if I'm describing this incorrectly, but they would set up desks where the servicer would meet there with the borrowers while actually, while the borrowers were going through this, this horrible time, losing their house potentially, and be able to have conversations and have resolutions done there on the spot, right? Like loan modifications or forbearance, right? Wasn't that pretty much what was happening at the Hope Now Alliance events?
Yes, and way back when, that was just one avenue, because we would send 3 million letters a month out to people that were starting to default and show they were 60 days past due, and we would combine our efforts with the government and the agencies and the servicers to have agreed upon solutions, which was really one of the hardest things to do, so that when we were communicating with borrowers, they had kind of similarly suited outcomes, because they got a modification that was following similar rules. And it's rather complex, but when we went out to the areas where the consumers were hardest hit, we were kind of shocked. It was the first time they'd even see their servicer or talk to them. They weren't really returning phone calls. It was a very dark time, as we remember, in the 2008 crisis. And so what really was important to me was that when you met with borrowers, how heartfelt this whole situation was, and it really brought it home that there was a family behind every mortgage. Yes.
Oh, I had myself on mute there. One of the things that I remember, so our editor-in-chief and myself went down to one of these events at Nassau Coliseum. And I mean, obviously we understood the story, we understood what was going on, we understood people were losing their houses, but to see families online, like mother, father, children online, to get actually, some kind of sympathy from a mortgage servicer, that just touched the heart. I mean, that really added the human element to what we do, which was interesting. So you and I last year talked a little bit about actually, how this industry, there was a point where it went from just being a job to something that impacted you personally. Can you talk a little bit about that transformation when you had that, where it went from, hey, this is something I could do a career, to, wow, this is something I feel connected to?
Yes, sure, of course. I've been a long-time mortgage banker, mortgage professional, and I've really operated in most aspects of the mortgage business and loved it, just loved the mortgage business. But after Hope Now, it fundamentally changed how I thought about the business. And so I do what I do mostly to see what we can do to improve the business for both the consumer and, of course, the whole business, lenders and investors, because it's such a messy business. And helping people get home, stay in their homes will always be with me. And even now, through this crisis, and I know we'll talk about it, I've reminded everyone I've talked to that the first thing to remember is put the consumer in the middle of this. Put the borrower and the family in the middle of everything you're thinking. Because if you're giving them a bad information up front, or you're not understanding what they're going through, it's going to be very messy, and you're going to break a lot of hearts and have a lot of grief in the system that's unnecessary if we have a path forward.
Yeah, well, so I mean, that being said, I mean, because no one knows actually what this path is, but so
Right.
why we're dealing with all this uncertainty, where basically people are watching, our borrowers that we've done loans for in the past are
Right.
watching the media, and there's messaging out there saying, don't pay your mortgage. You
Yeah.
have like
Yeah.
states like New York have actually there's legislative actions, to give a 3-month forbearance before
Yeah.
lenders actually even had a chance to talk to borrowers.
Right.
So talk to us a little bit about the messaging that we should be telling borrowers when they're
Yeah.
calling us, or even more outbound.
Sure. First of all, I think, Andrew, you're quite right. I mean, the federal government, for that matter, has legislated that there is a right to have forbearance for up to 6 months or even a year if you're a federally insured mortgage. And that got ahead of itself a little bit in that the messaging and the processes and the details behind that and how the mortgage servicers can work with their consumers was yet to be defined. And there were some existing processes in place, but certainly not all of them, and not all of them updated for the disaster pandemic that we're dealing with. If you think back in 2008, there were a lot of finger pointing, a lot of, well, the consumers should have known better, the lenders should have known better, bad products. There was a little bit of everything in that. And here today we're shocked in the system of the housing finance market. And the shock is we have massive unemployment that we're dealing with in the country until we can get back to business. Okay, that's a different shock. And so we need to take a deep breath. It is very important consumers get that deep breath. The loan servicers are working through what it is they can do for the borrowers that they are serving today that are calling in by the hundreds of thousands at this point, and probably millions across the country who have lost their jobs. And it is not just the hourly worker, it might be the salaried worker. So the first thing I do is say there is a path forward. There are a lot of hardworking people, the Mortgage Bankers Association, the Housing Policy Council, the advocates. I've been on several calls, mostly as a listener, weigh in once in a while with my observations of what we shouldn't repeat from the last time, a decade ago. But there is a path forward. And we already know there's a national allowance for not immediately repaying that mortgage if you've been impacted by the virus. That's a fact. That's the law. The real question is, it is a repayment. You do have to pay that back at some time, whether it's at the end of the forbearance or whether it's at the end of the mortgage loan. But there'll be a path forward for that borrower, that consumer, that family to get back on track. Everyone is committed to that. And there will not be penalties and interest and late fees and bad credit associated with it. That everyone should take a deep, deep breath and realize that's a huge opportunity to get through this.
Yeah. Yeah.
So
but
the second part, go ahead. Yeah.
I was going to, so yes, we don't have to worry about that, but we still have to make those payments. They're going to be due in 3 months, or going to due at the end of our loan. I mean, is that?
Yes. That's correct. Yeah, this is not a forgiveness. Oh, you don't have to pay, and that's the big break we're getting. That is not what this is. This is to help you through the most difficult time in your life, maybe in our nation that we've seen. So I think the good news is here, a responsible path forward for consumers and for lenders, servicers, and investors is being worked through right now as we speak. And what I can tell you from what I've heard is that borrower is going to have more than one option on figuring out how to repay what they've missed. Oh. In a perfect world, they'd get back on track, reemployed in 6 months, and be able to start making their payments again and put this behind them. And I think we would all be thrilled if that was the last we thought of this pandemic. So no one knows, and I think it's important to remind people no one knows. But Fannie Mae, Freddie Mac, FHA, VA, USDA Rural, that's 70% of the mortgages out there being serviced today are those mortgages, or give or take. That's the vast majority of mortgages in the country. And so everyone's running at this, and you will get better information as time goes on. If you don't get it tomorrow, take a deep breath. You'll get it in 3 weeks. It will happen. It's in play.
So, I mean, let's study any specifics as far as what you're hearing as far as service or response time, because we know actually that getting servicers on, on the phone actually, was
Right.
so difficult that, there were businesses that were created to just
Yeah,
try to, get a hold of them. And we'll talk about
I
who we
know.
should be trusting and who we should not be trusting.
Yeah, yeah.
But talk to us a little bit about any kind of feedback you've gotten from the servicers as far as their ability to handle already the influx of calls
Sure.
they're getting.
Well, so we were at I not quite sure if I'm right here, maybe a 20-year low on delinquencies. Okay, so most operations do not have a high default and loss mitigation series shop, other than the large servicers who are very used to dealing with some of those delinquencies.
Yeah.
So I would say, once again, and not to their fault, it's not their fault they didn't have a bunch of people waiting for a delinquency. The market was pretty good. We've been caught with a huge problem inside of all these shops. Obviously, they're vigorously looking at their technology they invested in. They're looking at their websites they updated so they could do some intake and self-service from that customer. And there are even some portals that have been used in the call centers. So my observation is they're vigorously looking at how to communicate with that consumer a little differently than they did 10 or 12 years ago. When I remember asking a bunch of loan services when I ran Hope Now, how many of you have an 800 number so people can call in for a problem? And I think I saw one hand raised.
What?
And so, well, because again, it wasn't that necessary. They had regular phone numbers. So that's my point. That was a decade ago. Today, they all have 800 numbers. They all have websites that are more savvy on taking input from the consumer. So I give the industry a lot of credit of setting up the right things to be a step ahead of this. But yes, it's going to be, they're going to be, every service, I don't care who you are, is going to be behind. They're going to be wait times. And so one thing that one of the services reminded me is tell people to take a breath. If they don't get us today and get us even tomorrow, we are set up to take care of them, given what's been announced, in addition to our investors like Fannie and Freddie working with us on what we need to do. So they'll be taken care of, and they just need to communicate with the servicer. My big recommendation is get a notebook, put today's date on it, and every day you do something regarding your loan, keep track of it, who you spoke to, what you've requested, what you put in writing, because it's complicated. And the more you're on top of your own outreach is the best thing you can do. Finding a third-party advocate is always helpful too if you need a housing counselor. But right now, I think what people need is to know they're not going to be out of their houses tomorrow because they can't make a mortgage payment.
So now we're talking about third parties.
Yeah.
Because we remember actually, in 2008, 2009,
Yeah.
there was a lot of companies out there that were helping, a lot of agencies that offer counseling. There's also a lot of, profiteers
Yeah.
that found opportunity from these borrowers who were desperate. Who do we trust? How do we trust? And, can the mortgage originator play a role in just giving, just pro bono guidance?
Absolutely. Well, of course, I mean, especially when you give the guidance to, I personally think you always should first start with a federal site. So that's the Department of Housing and Urban Development. That's the CFPB that's going to have questions and answers for consumers. That Housing and Urban Development will have HUD-approved housing counseling agencies with 800 numbers, some of which you can call directly and get advice from them. These are very adept people who can help borrowers through a crisis, even with their own budgets. So I would first go official. I'd be talking to my servicers. I would not be talking to too many people who call you to see if you need help. I saw tremendous scams. I helped the Federal Trade Commission go after scammers who were taking advantage of people through the crisis, who actually had a site just like ours at Hope Now. They would tell people they would help them with their servicers and take their payments and then never talk to the servicers. It went on and on. It comes out of the woodwork. I would not go to many third parties. I'd be very careful and just use trusted counsel, family, or your federal officials, really. That's what I would do.
That's great. That's great advice. And
Hmm.
what about the like a loan originator? So loan
Hmm.
originators, I know a lot of loan originators out there, and they want to help. They don't want
Yeah,
to. They don't want to. The last thing they
yeah,
want to do is create a liability.
yeah,
But
yeah.
what can an originator out there do to possibly help borrowers that are facing the situation? And I got a couple of questions that came in, if you
Okay.
don't mind, from the room.
Sure. Well, one of the things I actually think there's a little twofold question. I still think it's an amazing time to try to refinance if you can save money on a refinance. And I know that's tricky. I mean, everyone's pipelines got flooded, and then all of a sudden they got stalled because they may or may not be able to get all of their physical paperwork or appraisal work, et cetera, done. But again, the government has stepped in, and FHFA did a good job at allowing pictures and a desk appraisal to be happening for Fannie and Freddie. I think you're seeing some of that relief with HUD on the employment. And, so they're trying to help you unclog the in-process pipelines, but I would say these are record low interest rates. Keep working with people to save that extra $200 a month because they might need it. They might even be unemployed in 4 months, and so then they need to have a lower payment to deal with. So for me, that's one of the best stimuluses we could have in a difficult time. If you can refi, go do it.
Yeah.
And then two, I really think not panicking and staying in touch with them. And remember, I said it's not going to hit the borrower's credit for derogatory credit. They'll get through this. Whether if it's a 3-month forbearance, they can get back on track. They get reemployed by 6 months. They can move on as if life has not been that disrupted. So they, to me, I think you want to make sure your finances are in order. It's a time to get your house in order, and just be thoughtful about what you're doing, because your home is your biggest asset. It's your life. It's where your family lives. It's where your schools are, and it's important to keep that first for the community, for your family.
Yeah.
So I think the loan officer can stay in touch with them, and if they work for a company with a big servicing shop, they can certainly give them the most updated website information for the loan servicers as well.
Yep, it's time for us to be leaders. It's time for, as originators,
Yes, I agree.
share
That's
this
right.
information. Do whatever you can
Yeah.
to keep your borrowers, keep your community informed. I think that's great. So now I got a question about liquidity, warehouse line, and
Yeah.
cash positions. I feel like answering that.
Yeah.
Okay, let's.
Yeah, I am kind of, I'm very interested in that issue, and it is a tough issue right now for the mortgage business. I think, again, the government is working on looking at solutions for people for the Ginnie Mae liquidity. That's the advances I'm sure they're talking about, which I think is important just because you want FHA loans to still be made. You want VA loans to be made. If you can't sell them and you can't find a way to make sure you advance if someone stops making payments for a while on their behalf, then we're stopping those programs. I mean, you can't have it both ways. So we have to keep working with the government on those solutions, and Ginnie Mae has stepped up, and they have a program they've announced and to be helpful in the liquidity. And I believe there are other agencies working on the liquidity for the GSEs and the other taxes and insurance, some other things that need it, that even the PLS market. So there are a lot of smart people working on it, a lot smarter than me, but I think you can be assured that they're trying to make a solution so that this doesn't become an episode for all of the loan servicers.
Yeah, and now we didn't see. Back in 2008, we didn't see like the ratcheting up of underwriting requirements and like erode as quickly as it has, with today's FHA loans. In the commentary, Bob Wampler. But what's determining each company's decision to go to 620, 640, 680, 700 on FHA? Is it liquidity, warehouse lines, cash position? I don't know if you want to comment on that.
Again, my observation, I've talked to lots of companies, and they were just moving up. They obviously, if a loan is possibly, they think of that as a loan toward a propensity to default. What's interesting about this is it doesn't really matter what your credit score is if you get laid off. So, but I think that's what's behind it, but making sure you have a saleable loan. And And because the bid for some of these loans has dried up, and non-QM is a good example, you've seen a lot of dislocation there. It's all about making sure that you've got buyers for these loans. Because of the advances in the Ginnie Mae market that are required for a long, long time, it becomes an uncertain liability, and that's what's going on there.
Fantastic. All right.
This will pass, and the sooner they make a solution for it, it will pass.
Yeah.
If that makes sense. The sooner we have that liquidity straightened out, then we'll get back to more robust lending in these programs.
Yeah, and it's like, I think almost like 2008 prepared us for a real crisis. Like, it's like this. I mean, obviously 2008 was horrible, but we would do anything to be in 2008 right now.
Yeah, I think it's a different, I think we're all getting our arms around it. And again, I really think it's important for the loan officers and those listening, the brokers on this cast is, this will pass. We just have to find the path forward and make sure that the loans we make, we can close and sell them. And it might be a little disruption for a while in the mortgage market because we're going to have some widespread unemployment. And that's tricky. As I said, that's not just a restaurant worker. It might be, a dentist office or something.
Yeah. Fantastic. So we got Molly joined us, Molly Dowdy. Hello, Molly. Great tip on damaging credit. I've read a lot about misinformation about that, but we can count on Faith Schwartz to deliver the facts.
She's my friend.
Yeah, Molly is. Thank you for the feedback. We really, really appreciate that.
Thank you.
Yeah. So I appreciate all that you've done. What do you think your role is going to be? Because listen, 2008, you were so helpful in providing. How many borrowers were received loan modifications that were somehow impacted by the Hope Now lines?
I think
you used to do
they're
updates.
still going. Yeah, I think we had monthly updates. I think while I was there, it's about 8 million people got avoided foreclosure. Some of those redefaulted, as you know, but they were still in their homes, and then things settled down. And what we need to do is, they talk about the virus and lowering the curve. I think it's the same thing with this. We need to tamp down like what's happening, assess it, because the system can't take millions of calls in a day.
Yeah.
Not every company can. So what we have to do is kind of step back and say, what can we do to help borrowers? How can we get reemployed? How can we get income flowing so that they can get back into repaying at some point their mortgage? That's the healthiest approach to it. And everything we can do to keep people in their homes. While it's not a free ride, it's certainly an option for borrowers who are in distress, who have been impacted by the virus. And I do think that's very positive for borrowers. They have a chance here, and it's not like a death wish. This is a good option, and the servicers are very professional. And I would just say, again, the trade associations leading the housing right now are taking a strong leadership role. My personal role, I'm really just being helpful and a little bit behind the scenes at times, advising people on it and calling whoever I want to call to kind of say, gee, I think you got to worry about this. My message to this group would be the consumer should be at the center of every one of these discussions, because if you start losing sight of that, you make decisions that are probably not really the best ones for everyone, including the investors and lenders.
Yeah. So I just got another question popped up from Alan Jones. What's all the talk about liquidity issue for non-banks and Ginnie Mae, which we know actually we've got some relief over the last couple of days, but I don't know if you want to talk about that and address that.
Yeah, so it's a little bit technical, but for Ginnie Mae loans, you're required to advance principal and interest and taxes and insurance while the loan is not paying. And in this case, a forbearance, so let's say it's 6 months. So for 6 months, a loan servicer would have to advance that. And if you multiply that by all the anticipated millions of loans that could be defaulting, that could be a big number. Ginnie Mae securities are over $2 trillion outstanding. And FHA and VA have different repayment plans on that back into the servicer. So at the end of the day, it's an insured product, but because of liquidity and cash flow, you don't know when you're going to get most of your money back. It could be years. It could be 6 months. If it goes to foreclosure, it could be longer. If it becomes current, you get it right away. So that has been tough on warehouse lines. That has been tough on banks and the non-banks who that's not what they're set up to do, not in the widespread way. So that's the problem with it. Fannie and Freddie are a little better. They can pay back quickly the servicers, and there's less risk for the servicers on those loans.
Yeah, fantastic.
Yeah, it's complex.
Yeah, it is going to be, it's insane. So we got Brian Phillips has a question here, or more like a statement here. I'd love to get your commentary on this. I would love to see, I would love to see it be required that borrowers seeking forbearance have to take an online class similar to those getting home possible mortgages. They need to know the repercussions, the possible repercussion of forbearance. So, I just, that was it's an interesting thing.
So,
we didn't see that with any of the modifications that were done in 2008.
Right. Well, I would say, actually, it's an interesting comment. I don't think the repercussions are horrible for borrowers. It would be worse if we put them right into foreclosure and notification in 90 days, and that was at the end of it, they'd be going into default and foreclosure. So, one, I think it's better for borrowers that they have that option. Two, we're not reporting to the credit bureaus, so they won't have derogatory credit. Yeah. And three, they should pay that loan back as soon as they can start paying it back. And most people operate that way because it's the most important investment they have. If they follow those three rules, I would say to him, forbearance was a Band-Aid in a national crisis where we had very few tools other than them to do that to help people get back on track.
Yeah. So it's not, so I've always in my mind, I've always figured actually it's much more difficult if you give a borrower a pause on their payments and then all of a sudden they gotta bang out 3 payments at once. It becomes, and listen, if it's
right.
costs, because we know there's so many borrowers are living paycheck to paycheck.
Right. No, that's right. Yeah. So listen, that is not the only option. And the borrowers will be giving lots of options on how to repay that. So I guess that's the bigger point. There's a lot of tools, and they're working through those tools today with Fannie Mae, with Freddie Mac, with FHA on what they can do longer term if they can't repay that right away. That's exactly what's going on. So I'm optimistic that there'll be several options for that borrower not to be in distress over that.
So, and I have to say, Faith, I mean, you definitely have this positive outlook. Even actually, when we spoke a week ago, and I know you're having conversations, with the GSEs, talking to the government. So, do you feel a lot better from the initial response that government had in 2008 compared to now? Like, what is your general feeling? Because it seemed like in 2008, no one was prepared for anything. And
and well, it was also, we had 2 different administrations. We did this through the first administration with the Paulson, Bernanke, and then we transitioned to Tim Geithner and Obama from the other administration, which is absolutely fine. It shouldn't be political, but what happens is all these new people come in and want to start it over differently. When we started Hope Now, we were pretty much told by the government, the industry better stand up tall and get working on this coalition and get your acts together to start addressing the massive problems you're going to see, which we did. And they did use the bully pulpit a little bit with the industry to say, get together, start reporting. And they kind of dictated what we needed to do. That was the Treasury and HUD. And that started Hope Now. I felt like I was in the Treasury offices as much as any of them. And then if you take it forward, we needed a subsidy. The modifications that the industry and investors came to wasn't enough to lower the payments for borrowers to stay in their home. And so then you saw the HAMP Mod and the HARP refinances. That was with a government subsidy of the TARP funding that you saw. So if you think about the HERA and all of how that came about, we didn't have any subsidy funds from a third party or the federal government when we started it. A year and a half later, we did. And I think I will tell you, the crisis brought people together beautifully. I mean, I felt like people worked really hard together, and I was so proud of all the people I know in the industry who did that. And I see a lot of that today, but I still see some people who probably don't remember it. And so, they're going to be finding their way forward. And that's why I think we've done a better job, the trades and others, to say, let's get to this now. Let's agree now on what we're going to do. Let's talk to the agencies. Let's get the government to lean in and tell us what they're going to help us do. If nothing else, give us good guidance to tell consumers. So that's, if you think about it, just a few weeks down the road, that's not bad.
Yeah, no, it's
So
amazing.
I'm optimistic. I am. I mean, this is a big problem. I'd say it's bigger than what we dealt with before.
Oh, yeah.
It's more more dislocation everywhere, and that's what we all don't know. So, but I'm optimistic people are getting it, and I'm very pleased that the government had a package passed so that Treasury can work on that.
Great. So, do have a couple of questions that came in around technology. So 2008, a lot of servicers had old, mainframe computers that just weren't prepared. So where are we from a technology standpoint? Are servicers a lot better positioned from their tech stack?
Yeah. I think the tech stacks, even the legacy programs that are out there, the Black Knights and others, have done a good job getting more current and more nimble with what they're offering on the servicer side. I would also say, and I'm affiliated with this company and that I'm on their board, but like people like Forum Free and others who do, income, employment, and asset verifications in a minute or two, help you get quick information that you might need to make a decision on a borrower or a contract. Say, oh, you've gotten reemployed. That's great. We can go forward without lots of paper. So my feeling is the digital mortgage since then is going to help us on the servicing side as well as the origination side. After this crisis, we'll be much better suited to more end-to-end solutions because we'll realize that being remote and a remote notary is okay. E-signatures are okay. E-notes are okay. Appraisals, desktops with scanned pictures, 3D scans attached to them probably work. So it feels to me like we're going to see a reordered mortgage business, which has been badly needed.
Yeah. By the way, Christine Beckwith says hello to you. So,
hi, Christine.
Wonderful. So fantastic. So listen, I really appreciate you taking the time to spend with us, to talk to us a little bit about, what we could do as an industry, sharing some of the resources that you did, and, giving us some reassurance that we're in better hands today from a lender standpoint, from the government intervention standpoint. And if someone wants to get a hold of you because they just want to be able to just chat with you, I know I see you have Housing Finance Strategies. You're on the board of like 4 or 5 other major companies in addition to Form Free. So what's the best way to get a hold of you?
You can do Schwartz at housingfinancestrategies.com.
Fantastic.
And, I'm on LinkedIn a lot, and I'm always happy to talk with you, Andrew, anytime. And I just ask people to be thoughtful and positive and don't get frightened because I think we're in for a little bit of a round, but I am pretty confident we'll get through it. I really am.
Take a breath. Right?
You take a breath. Let's all take a breath. We all have to.
Yes. All right. Thank you so much again. We really appreciate it. All right, everyone. Thank you so much for watching. Appreciate it. I'm Andrew Berman from Mortgage News Network, signing off.